Good morning. Happy Monday. How's everybody doing? Did everyone have a great weekend? How are we hanging in there? Hopefully you're doing more than hanging in there. Hopefully you are living your best quarantine COVID life as good as you can right now, right? I have to hold this cup with my other hand. Okay. Wonder why they don't put things on both sides of the mugs. Because I'm not left-handed. I don't know. Anyway, as always, we're going to give everyone a few minutes to get on. So when you get here, go ahead and say, hey, let me know you're here. Let me know if there's anything fun and exciting you did this weekend or anything you have, any exciting plans you have coming up. I worked a lot of the weekend and I had a lot of family time. A lot of unexpected family time. I thought this weekend was just going to be work, because we have a deadline tomorrow. And I found out my mother-in-law had a birthday party on Saturday. And then I had, on my side of the family, we had my aunts in town. So we got together on Saturday for that. So a lot of things I just didn't plan on, but it was always good. It's always really good to spend time with family. We get along pretty well. Too much of any of us tends to not be a good thing, but for the most part, we get along really well. So yeah. What else? Oops, things are blowing up. Okay, there we go. So we have our deadline tomorrow, and then we have one more 2019 deadline. One more. We'll talk about that at the end of the day. You know, when I give you guys all the updates and important reminders, we'll go over the last 2019 date of the year. Okay. Let me know again as you guys get here. Let me know you're here. Say hey in the comments. Let me pull up my comments over here. There we go. I use StreamYard and I upgraded to from the free version to the lowest paid version. And I did find that I now have my comments in StreamYard. When I was on the free version, for some reason, I would see comments in Facebook, but I would not see them in StreamYard. And that concerns me because people don't just watch on Facebook anymore. We're on Facebook, we're on our Facebook group, we're on our Facebook business page, and we're in YouTube. So StreamYard is nice because it brings all of those comments together into one place for me. All right, I'm going to go ahead and get started. So after I cough. Oh my gosh, real quick, has anyone else, I don't know about you, we're in Colorado, my allergies have been terrible the last 2 days. I felt like I had a cold, except for the fact that my eyes were itchy. That's not cold symptoms, but other than that, I felt like I had a cold yesterday. But took an allergy pill, felt better. All right, so now we'll get started. So y'all, I'm so happy you're here. For those of you that may not know me, I am Bree Beers of Bree Beers and Associates, formerly Lipa Beers and Associates. Our firm prepares tax returns for small businesses and individuals, but we know that there is so much more to a good accountant than just a properly prepared tax return. We also provide, and we love tax planning. It's our favorite, it's our jam, because it's where we get to sit down and strategize with our clients to help them minimize their annual tax burden and keep that extra cash in their pockets to invest either back into their business or into themselves. And finally, you guys, we are a client-centered tax accounting firm, and we strive to educate our audience because we understand that you, as a non-accountant taxpayer or a non-accountant business owner, you don't know what you don't know, right? So we want to create some clarity on that unknown for you. The arsenal of tools we have that we provide for you guys is crazy, and it continues to grow like every week, no joke. So one of those tools is our awesome Facebook community, Money, Tax, and Finance for Small Business. And if you are a business owner and you are not in that Facebook group, you should definitely hop on over there and join there. It's awesome. It's an amazing and supportive community where we post daily tips and tricks, and we provide multiple live training events each week. And those trainings are on Monday right now, 9 a.m. Mountain Standard Time, normal live training session. So this is where we talk about the topics that you guys are asking about most often. So you guys come into the group or you DM me with questions. I take those and I make them into these trainings. And then on Thursdays at 2 p.m. Mountain Standard Time, we do our weekly updates and Q&A session. So we give you guys any updates we've heard from the week on tax in the tax world. Lately, it's been the PPP EIDL world, but even that for the last 2 months, we've heard nothing. And then on Thursdays, we open it up to live Q&A. So I'll bring a few questions that I've gotten over the week, and then you guys are welcome to, when you join me on Thursdays, just post your comments there and let me know. Hi, Sarah. All right. So today is our last part of the business expense series. And today we are talking about your home office expense. Right? Today we're talking about home office expense. All right. So I want to start by identifying what your home office space actually is and giving you guys the definition of what IRS calls home office space. So the IRS definition of your home office is exclusively and regularly used for your trade or business. Exclusively and regularly for your trade or business. So what that means is it's got to be a space in your home that's used only for your business. All right. I have so many clients tell me, oh, well, they do their work on their dining room or in their bedroom. And that doesn't count. Okay. It cannot be a room that can be used or is primarily used or supposed to be used for something else where you perform other activities. All right. It can be a spare bedroom or a study or even a large closet, you guys. It has to be a space that is 100% your home office space. For some of us, that means it's a portion of the room. All right. So for us at my house, my husband is a realtor, so he takes the home office deduction. I obviously don't because I have my own office space. All right. And for him, his home office is in the basement. All right. And our basement is I think our basement's probably, I don't know, I'm just going to make it 400 square feet, right? But we don't use the whole basement for home office. We use a portion of it. So a portion of a room can also be used, but if that portion of the room is used exclusively and regularly for your trade or business, you can take a portion of a room as your home office space. All right. So an example, if you have a basement and half of it is your kid's toy room and the other half is your office space, well, then the square footage of that half that is used for your office space can be taken as a home office, as part of your home office. Used, that's the word I'm looking for, used in your home office calculation. All right, so once you've determined what your home office is, that it's not your bedroom, it's not your dining room, it's not your kitchen counter, it's a designated space somewhere in your house that is used for your home office. Okay, you gotta estimate or calculate the square footage. Right? If you use a whole bedroom, it's really easy. A lot of us either know how big our bedrooms are or we can measure them, right? Get out a tape measure. So let's say your spare bedroom is your home office. The whole thing is designated for home office use and it's a 10 by 10 room. Then your home office space is 100 square feet. Let's say you have your basement and it's 400 square feet and half of it is your home office. Then 200 square feet is you're going to be able to take as your home office space. All right, so the first thing you got to do is estimate the square footage of your home office space. All right. So after that, there are two methods that you can use to take your home office expense. Okay, there's a simplified method and a proration of your actual expenses. And this, you guys, is an area where I definitely suggest you have an accountant of some sort help you and do this for you. Because these two different methods, all right, they have pros and cons, and that's what we're going to talk about today. But you do want to make sure you're calculating it correctly, and you want to make sure you're taking all the expenses into account that you can. If you're taking the prorated actual expenses, And you need to know the difference between the simplified and the actual. So that's what we're going to kind of dig into today. All right. But regardless of which method you use, you've got to know, again, what the square footage of your home office is. All right. So as we go through these examples, I'm going to use a home office that is 100 square feet. I'm going to say that I have a 10 by 10 bedroom that I use exclusively for my home office. So that's 100 square feet. All right. And that's the number I'll keep using throughout this example, throughout this training. All right. So the first one we're going to talk about is your simplified method. All right. So beginning back in, I think it was 2013, the IRS began offering the simplified option for claiming the home office deduction. And this new method uses this prescribed rate multiplied by the allowance. So they came up with this prescribed rate, and they said, okay, in 2009. Ooh, I don't have the 2020. Oh, y'all, I only have the 2019. Let me just look. 2020. Let's see. Let's see if it's changed. Nope, still $5. All right. So the prescribed rate is $5 per square foot of your home office. And there's a max of $1,500, which means there's a max of 300 square feet. All right. So if you use the simplified method, and we have our 100 square foot office that we just talked about, right? 100 square feet times $5 a square foot, we would get a $500 home office deduction on our tax return. All right. And for tax prep, you guys, this is going to be the route that is most cost effective if you're hiring someone, or most time effective if you're doing it on your own, because all you have to know is the square footage of your home office. That's all you need to know for the simplified method. You don't have to track any expenses or anything like that. All right. However, it might not result in the most cost-effective deduction available, right? If we might find out that if we take our actual expenses, and which we'll talk about in a minute, we might get a deduction that's 3, 4, 5 times that much. All right. So it may not result in the most cost-effective deduction on your tax return, but it's going to be the quickest, easiest way to take that home office deduction. All right, and at the end, I'll come back around a little bit and I'll tell you that another advantage of doing the simplified method is that you don't have to depreciate your home. I'll talk about that at the end, because depreciation is it's a very complicated concept, and I don't want to overburden you guys, but I will give you kind of just a lowdown of what it is and why you might not necessarily want to take the actual expenses of your home office, because you may not want to depreciate your home. So we'll circle back around to that. Just know that if you take the simplified method, you don't have to worry about depreciation. Okay, but again, you may not get the highest deduction possible. All right, so next there's the proration of actual expenses. So when you take that, you guys, so the first thing we want to do if we're going to take actual expenses is we're going to take our home office square footage, which we've already decided is 100 square feet, right? For this example. And you have to figure out what percentage of your whole house your home office is. So let's say your home office is that 100 square foot space, and the total square footage of your condo is 1,000 square feet, right? Well, then 100 divided by 1,000, so your home office divided by your total square footage, is the business use of your home. So in this instance, it's a 10%. That's what it calculates to. My home office in this example, my 100 square foot office, is 10% of my total 1,000 square foot house. All right. So what that means is if I'm taking all my actual expenses and I collect them all, I get to deduct 10% of those expenses as my home office deduction. All right. So that's the first step. The first step is figuring out what percentage of your house the home office is. Our second step is going to be tracking your actual expenses, right? So the first thing I want to say is this is not something that goes into your bookkeeping file. If you use QuickBooks or Xero or anything like that, you don't track your home office expenses in there. Okay, it's not something that goes in your QuickBooks file or in your bookkeeping file. The best practice I give to my clients is to use an Excel spreadsheet. All right, and actually, Sarah, who is on here, is on my team, and her and I are creating a home office deduction worksheet this week. So there is a link in the comments, and I will put it here. Let's see if I'll put it here again. Nope, I don't have it saved anymore. If you get on, it's in the comments, whether you're on YouTube or Facebook, the link to the home office deduction calculator is there. Go get it on the wait list, and then later this week I'll have it released for you guys. And this is going to help you track your home expenses. All right, so use an Excel spreadsheet, and preferably ours that we'll give you later this week. But just to go over some of your expenses, what does that include when you're talking about a home office? All right, so utilities. Okay, so your electricity, your gas, your internet, your landline phone. Quick side note, if you have a landline exclusively for business, then don't include that in your home office, right? Actually take that as 100% business deduction rather than calculate it into your home office percentage. I'm gonna say that one more time. If you have a landline at your home and the only reason you have it is for business, take it as a 100% business expense on your business return. Okay, do not take it, don't calculate it only at like 10% or whatnot. But if you have a home line or a fax line or whatever that you use for the whole house, then you're gonna have to put it into the calculation for your home office. All right, but if it's just for your business, take it at 100%. All right, other expenses you wanna include in here that you're gonna see on the worksheet when we get it out is your HOA fees. You get to take a portion of those. Your homeowners or your renter's insurance. Your security systems. If you have a housekeeper that comes in and cleans the entire house, including your office, you'd get to take a portion of that. So I think I called this utilities, but expenses. All right. And so from there, and then your rent, if you rent, or your mortgage interest and your depreciation. And this is where I want to circle back to that darn depreciation. So I keep getting a lot of questions about depreciation, you guys. And I'm going to be honest with you, like I'm going to do a training on it a little down the road. But if it's something that you want, if it's something that you're concerned about or you want to make sure it's being taken right, then you absolutely should be having an accountant do this for you. Okay, because with depreciation, there's a whole bunch of rules and loopholes and everything that make it kind of complicated, and you want to make sure you're tracking it right. Okay, back onto, so there will be a training, so I can kind of give you guys later down the road about depreciation, but what you need to know today is that when you take the actual expense route for your home office, okay, you are going to take a portion of depreciation on your home. And you guys, depreciation, that expense that you get to benefit from year after year that you take a home office and you take the actual expenses, that expense, no matter how small or big it is, decreases the cost basis of your home. Why is that important? Well, it's only important when you go to sell your home. So when you go to sell your home, okay, the depreciation, depreciation lowers your cost basis so that you're going to have more gain, more profit to record. All right, I'll give a really quick example. So let's say your house is $300,000, okay, and you've taken $1,000 of depreciation. All right, let's just make it very small. Let's make it $10,000. You've taken it for a few years, okay? So now, instead of your cost basis being the $300,000 you spent, your cost basis is only $290,000 because you've taken $10,000 of depreciation. So when you go to sell your house and you sell it for $400,000, right? Instead of having that $100,000 in gain that you would have had off your $300,000 purchase price, you now have $110,000 in gain. Well, in profit that you made, okay, to record. So that's really the important thing to think about. Again, you don't have to know how to calculate it, but that is what your accountant, if you have one, is going to do for you. Okay, and that's why I believe it's really important for you to have an accountant, because a lot of people, so many people, even with accountants, you guys, so many people take the actual home office deduction because it is better, because they get to take a higher amount of, and the reason it's higher usually is because of that depreciation, honestly, if you own your home, or your rent, because rent gets expensive. But when you own your home, they don't take into account that that depreciation is knocking down the cost of their house. All right. So Wendy says, isn't short form method the best? That goes back to, it depends. So the pros of the short method are that it's easier, right? It's easier and it's quicker. So whether you're doing it on your own or you're having someone else do it, so you're either saving yourself time by just taking the simplified method, or you're paying your accountant less because there's less forms to do, or there's less time, depending on if you're how your accountant charges, right? But there's a good chance you're taking a much smaller deduction year after year. So you're getting less benefit from your home office, all right? Flip to the other side. So that actual account, the actual expenses is likely going to result in a higher home office deduction year after year. But again, it's going to take you more time because you got to track your expenses, or it's going to take your accountant more time because they have to do all the nonsense, all that stuff. And if you own your home, it's going to, you do take that depreciation, which affects your basis in your home. All right, so there are a few things I want to chat about before I let you guys go. So first thing is, if you are a W-2 employee, including those of you who are W-2 employees in your S Corp, okay, that's me, you can no longer take the home office deduction on your 1040. The Tax Cuts and Jobs Act removed that. Okay, so what used to happen is if you worked exclusively from home, if you had an employer, right, whether you worked for someone else or you worked for your S Corp, because when you're an S Corp, that's how it's set up. When you worked for somebody and if you had to work at home, you were able to still take a home office deduction on your Schedule A as part of your itemized deductions. They got rid of that. Okay, they got rid of that in the 2018 Tax Cuts and Jobs Act. So keep in mind that even those people that had home office deductions, a lot of them didn't have enough deduction. Like, it has a floor, so they didn't always get to take it, but that's not a thing anymore. Okay, so if you're an employee of someone else or an employee of your S Corp, there is no home office deduction for you. Okay, that's not a thing anymore. So my suggestion to you there is that you can talk to your employer. I had a lot of people when this first changed who worked for smaller businesses, and their employers set up what's called an accountable plan that helped offset the loss of the home office deduction. So the accountable plan, what that does is it allows you to receive almost like a reimbursement for your home office amount. So they could decide to do a simplified version, every year give you $5 per square foot into your paycheck. So that's what an accountable plan does. It kind of compensates you for not having that deduction anymore. All right, if you're an S Corp, there's things you can do, but way too many things to dig into for today's training. Okay, if you're an S Corp and this is a thing for you, you have a CPA to help you. If you don't, you should. And then one thing, a question I saw just yesterday, I think it was in Jamie's group, Financial Literacy for Women Business Owners. FYI, if you're not a part of that group, it's awesome. Even if you're a guy, she lets everybody in now. Really good group. There's like 30,000 people in there. And anyway, so head on over there and join that group too if you want. But a question I got earlier this week is, so the client wanted to add a room under her house for the home office and wanted to know if the expense for the add-on would be a deduction. All right, so I'll say that again. She had no space in her house, right? She was working at her dining room table, and she's like, okay, I think I'm going to add on to my house. For some people, I hear, she sheds, or they make like offices in a tough shed, right? So if I'm building that office just for my business, that's a deduction, right? Well, no, it's not. So what happens is when you build that add-on to your house, that cost associated with building that add-on is added to the cost basis of your house. So let's go back and use that $300,000 house we used in the last example. And let's say you add on an office and it costs, $50,000 to add on. I don't know what it costs to add on to a house. So now your cost basis in the house is $350,000. All right. So that's where the tax benefit of adding on to your house or making big improvements or whatnot come into play. So you get to increase the cost basis of your house. All right, which if you're taking depreciation means you now get more depreciation, right? Or when you go to sell it, now you have less profit to report. All right, so not necessarily a home office question directly, but just know that if you build a home office, you don't just get to deduct that. All right, you get to add it to the cost basis of your entire house. And then if you're depreciating your actual, if you're taking actual expenses, you'll get a larger depreciation expense. All right, again, if you take the simplified method, depreciation is not a consideration. So in that case, for home office, that additional office that you just built on doesn't have any benefit tax-wise. But again, from a bigger picture, take a step back, you've now increased the basis in your house. And when you go to sell, you have less profit, less capital gains to report. All right, so that's it. I don't see any questions, so we're good there. So just a couple end announcements. As always, I mentioned at the beginning, we have 2 deadlines left for 2019. We have tomorrow's deadline for my S Corp and my partnership returns that we are wrapping up in office right now. So if you are an S Corp or a partnership and you don't have your tax return done, do it really fast because it's due tomorrow. Otherwise, there's penalties and interest, right? And then October 15th. October 15th is our last 2019 deadline of the year. October 15th is when your C Corp returns are due, which I don't think there's a lot of C Corps around here, and your individual returns are due. So your individual returns, including if you have a Schedule C, right? A sole prop or a sole prop or a single member LLC words. So October 15th is your deadline. If you are a current BBA client, you have until this Friday to get your stuff in to our office and make sure we get it filed on time. All right, so hurry up. If you're our client, hurry up. And if you're not already a BBA client, we are not at a place right now to take on new clients for 2019 tax prep on time. If you don't mind being late because you have money coming back or because there's no penalties if you file late and you have a refund, then we're happy to do your 2019 return. We just can't guarantee any new client 2019 returns by October 15th. We're just past our capacity to do that. But if you need any 2020 work or a late file 2019 return, head on, schedule a free consultation and, get on my calendar so we can chat. Big things, tax planning will begin in November. And so if that's a service that interests you, definitely make sure you are on our email list. And the details for the tax planning packages and the scheduling for all of that will start appearing. Actually, I keep saying the end of October, but we'll start kind of probably dripping details into newsletters sooner than that, just so you guys kind of know what to expect and what's going on. And then finally, just a quick shout out again to all my PPP and my EIDL loan borrowers out there. Don't forget, we have a few options to help you guys out as well. So for those of you that are maybe a little, that just need a little bit of help or maybe kind of cost conscientious, we have our personalized PPP strategy sessions. So these are 30-minute one-on-one Zoom meetings. You get the recording of the Zoom meeting and it's you and me, and you just get the whole 30 minutes of just asking whatever it is about your specific PPP or EIDL situation that you need help with. So if you're really close to having maybe forgiveness applications completed, or maybe you have a little bit of money left to spend and you want to make sure you spend it the right way, whatever your questions are. If I have not answered them in the videos I've created for you guys because you have specific questions to your business, schedule a personalized PPP strategy session. It will, the value of what you pay for those sessions will come back at you tenfold, I promise you. Even if you are not, even if you're not in search of a new CPA, for your taxes, but maybe your CPA didn't really keep up on the PPP stuff. We'll talk about that at a different day and time. But even if you don't need me to do your taxes, you just need some PPP guidance and love, then schedule a PPP consultation with me. There's no pressure for you to come on long term. Let me just help you with your PPP stuff, please, and your EIDL stuff. All right. Then if you're someone who's like, nope, I am not a DIYer. I just want to give someone all of my documents and all of the things and have them deal with the forgiveness paperwork when it's time. Then we are also providing full service PPP forgiveness application completion services. I have to come up with a better name than that, but that's what I've got right now. If that's something that interests you, go ahead and schedule a free consultation with me. We'll discuss the pricing and the services for that. All right. So that's it, you guys. Thanks for sticking with me a few minutes late. I will see you guys Thursday for Q&A and updates. And then next Monday, since our business series is done, next Monday, we start, I'm talking slow because I don't have it open and I want to see if I have it here just to get you guys excited, maybe. So this was part 3 of business deductions. You guys, next week we start a retirement series. I'm really excited about this. So next week starts our retirement series. It's a 3-part series. And next week we'll talk about IRAs. So come join me if that's something that interests you. All right, you guys, I will see you on Thursday at 2 p.m. Mountain Standard Time for updates and Q&A. Have a good week.